Economist Brian Wesbury with me now. Is there a winner here when it comes to these tariffs? Can you pick out a winner in an industry that might be winning here?
Yeah, not that I know. You know, Stuart, I haven't really thought about it that way. But no, look, I'm a free market economist. I've never really liked tariffs. I love the Trump agenda of reducing the size of government, reducing regulations. I get going after immigration and fentanyl and using tariffs as a negotiating tool. I totally get that. But it is one thing that worries me. But let me just step back 1 second, Stuart. You know, we have lived in the ever since 2008, we've lived with this stimulus economy. The Fed is printing money, the government is handing out money, and what that does is it takes money from people who are more likely to save and invest, and it gives it to people that are more likely to consume. And so what's happened since 2007, consumption is up 60% and production is only up 10%. So if you're consuming more than you're producing, where do you get it? Well, you import it. And what's happened is our trade deficit has gone from $40 billion a month, which was already too high, to now $100 billion a month, over $1 trillion a year. And I think part of this push for tariffs is coming because of the way we have managed our economy. Yep. And I think the way you fix it isn't necessarily punishing other producers. We need to cut taxes on corporations, cut regulations, and start producing more here. And I think that's what we really should be focusing on. But I get it that there's pressures out there, and Trump is responding to them.
Let me just turn this around for a second. If the tariffs stay in effect for, say, a month-long trade war, what's the impact on the economy, in your opinion?
Yeah, so if you add up China and Mexico and Canada and look at all their imports, it's about 5% of GDP. All right, that's it. So let's just assume 5% of GDP, prices go up 25%. Well, that means the other 95% are normal, and we're not going to have that big of an impact on inflation, if any, at all, because other prices will probably go down. So that's number one. Number two, we're not going to lose that full 5%, but I think it will slow the economy down a little bit. Then we have to count on cutting spending and cutting taxes to lift it, and cutting interest rates to lift it in other places. So net, we're going to make it through this. I still expect a recession, but this is not the Great Depression. We're not in 2000. We're not in 2009. We'll have some pain, but we have to before we get to the gain.
You've got 60 seconds to deal with this. Hedge fund manager Ray Dalio, he says we're at risk of an economic heart attack because no politician has a plan to get the deficit down, and we've got a debt crisis. What do you say, Brian?
I completely disagree with Ray Dalio on this. We have a plan to get the deficit down. I mean, Doge is doing it right now. We are taking back a lot of the Green New Deal open-ended spending plans. I think we're going to see the deficit down by $1 trillion. It needs to come down further. They're going to have to make some really hard choices eventually in America. I don't know if Trump's going to do it or not, but Social Security and Medicare are a serious problem, but I do believe we're going there. This is not 2000. It's not 2009. It's not a heart attack. It's heartburn. Let's put it that way.
Agita. Yeah, I got it. Brian Wesbury, thanks for joining us this morning. Interesting stuff. Stuart. We appreciate it. Thanks very much.